Oh, there we go. Yo, what's up for everyone on the replay? I hope you're having a great day. The market's a little red, so let me start this off with a quick portfolio update, but then I have two stocks that I'm going to go over the very beginning that I think are steal of a deals right now. Like really good stocks to buy now, not financial advice, of course, nothing in this is. But yeah, let me start this off with a quick update. My Webull risk on account is only up 5% all time. So we definitely haven't done too well in here. We're down 1% on the day. Here's what's kind of leading that, food to kind of the software like Reddit, AppLovin down on the day. And then, well, that's this portfolio. Was anything green? I think AMD was slightly green. Yeah, AMD slightly green, Dave a little bit. But then we have our Robinhood account. This is known as my dividend only portfolio where every stock in here pays a dividend. Year to date, we are down 5.7% year to date, just since January 1st. So pretty red, but still in the past year, we're up 16%. Every single stock in here is red on the day. So hit the like button for me. Here's our total percent change. So luckily we are green on every single stock except for Carlisle right here. That one's a little, slightly red, but that's okay. And then we have a Roth IRA. A Roth IRA is just a tax-free retirement account, which is down 12% year to date. RIP. So here are all the stocks that we own, and here's my total percent change. I don't know why HCA Healthcare is not loading there. But yeah, we are down bad on like CorMedix and Webull. I bought like 2 shares of each of those yesterday, which is cool. And then finally, we have our Moomoo account, which is known as our buy and never sell portfolio. This is what's holding its weight right now because actually this portfolio is green on the day. It's almost up 1%. Like Comfort Systems, they're green on the day. Powell Industries is up 3.7. And then our oil and gas play, Murphy Oil USA, is also green 2.6%. This is the gas station play. As we all know, gasoline prices are pretty high. So the thesis here is basically people don't fill up their tank as much whenever oil and gas prices are really high, leading them to come back to the gas station more frequently than they normally would, leading the gas station to sell more merchandise like candy bars and stuff, which is where they make a lot of margin. So anyway, let me start this off by going over one stock that I do own that I think is one of the best buys in the market right now, not financial advice. And this one's a dividend company. And it's a growth company. This is ABBV right here. If you buy the stock right now, no matter what, you're getting 3.4% of your money back just in a yearly dividend tax. Well, for me, it's tax-free, even in a taxable account. These qualified dividends. So you're getting 3.3% of your money back. Let me show you my thesis on why I think AbbVie will give you around 3 to 4% in stock price appreciation as well. Oh, dang, they removed the news, but basically they're working on a weight loss prescription that's already shown great phase 1 results, like 10% weight loss reduction. It was actually working great. So there's a nice little weight loss tailwind, but not even talking about the weight loss prescriptions. This is why I really like AbbVie. Again, what does this company do? They sell a bunch of different prescriptions like Skyrizi. This is their main business, and check out the growth here. This is why I think on top of the 3.4% dividend, you should get 3 to 4% stock price appreciation every year on average as well for a 7% total return. Their main business is, look at these growth rates in the middle. This is what I want to own, a company that grows at this rate, up 33, after grew 60, after grew 52, after grew 85. That's the kind of growth I want to pay for. And it's not like it's just that one prescription growing, like their next biggest one, which is 14% of all the revenue. Look at that annual growth trend as well. Just this quarter, it's up 30%, after grew 47, after grew 59, after grew 56. That is some crazy good growth. And they have a bunch of other ones like Botox Therapeutics. That one's at a record as well. So anyway, I think this one's pretty good at a 21 forward PE. We're not looking at the current PE ratio because they had a total one-time adjustment to their net income, making it look super low when they actually made a bunch of money. So you really look at a forward multiple. AbbVie's only at a 22 forward PE. For the growth of their main 2 prescriptions, I think that's pretty fair. Plus the dividend you get. It's a nice healthcare defensive name. So it's a nice one to just own as a small portion of your portfolio. You get income and should give you a couple percent stock price appreciation every year as well. Hey, what's up, y'all? What's up, Looney, Caden, Vulcan, and Luffy? What's up, y'all? Actually, I'll go to check out this stock. Luffy says, can you look at the forward PE on Micron? It's so low. Yeah, Micron, check this out. This is your memory shortage play. Yeah, congrats if you own this one. They're pretty much at an all-time high. If you've ever bought this stock, you're almost definitely up on your money. These memory shortage stocks, Whoa, they reported gangbuster earnings. Check that out. So analysts expected $10 billion of net income, after tax net income. Well, they pulled off 13.7 billion, easy math, like 37% beat, but it's really the future expectations. Let's go look at that forward PE. Yeah, look at that. This is why I think Micron isn't like, this is the crazy part. Even though Micron's at all-time highs, it's not exactly expensive when we judge them off next year's earnings, because look at this, forward PE is a 4.9. What does that mean? That means they trade at 4.9 times next year's net income. And for a growth company, you always look at the forward metrics, and look, the net income on the very left was 3 billion, 3.2 billion. Well, on the very right, it's going to go year over year all the way up to 25 billion of net income. If you annualize that number, that's basically 100 billion of after-tax net income a year. The whole company is worth 500 billion, so that's the math they get it from. $500 billion on 100 billion of next year's net income, 5 times next year's earnings. So that's why I could see Micron going up easily like another 20, 30%, like without much trouble. And that would only put this at like a 7 forward multiple, kind of crazy. But that being said, this is also just a sentiment play around the memory shortage. I don't know how, but let's say unexpectedly some sort of supply chain issue or supply chain fixes itself and the price of memory drops like a rock. Well, they will follow that. But for right now, it seems there's no clear ending to this memory shortage. They're like backed up to like 2028, just crazy. So yeah, they're worth $500 billion and they only trade at 5 times next year's net income. It's just like how that potentially next year's peak net income ever maybe for Micron. Like they'll maybe never, like 2027 will 2026, 2027 will be the highest year of net income profits ever. They'll never go higher, maybe down in the future. And hey, what's up, Israel Lopez? Dude, thanks for those gifts there. Yeah, I got you. He said AXTI. Let me check it out for you. And what's up, MC? Good to see you all. Eli Lilly. Yeah, Eli Lilly is great too. So here's AXTI. Wow, look at that. Congrats if you own this stock because they are at an all-time high, like literally all-time high. Well, I didn't see that. Well, it's kind of close to its 1999 price. But anyway, multi-decade high right now. Let's go check out why this is happening. So, oh yeah, I remember this company. They have they make the raw material substrates for semiconductor equipment. So they're like the materials play. So, check this out right here. If we go to their revenue, 76% of the revenues, they're substrates, and then raw materials and others, another 24%. But these substrates and stuff are used in semiconductor equipment, and the demand for this is off the chain. So if we look at their right now revenue, it looks kind of bad. Revenue's down 9% year over year, not good. But it's the future expectations. I guess the revenue is supposed to go from 17 million to 30 million. So revenue is almost supposed to double, and they're only supposed to lose $1 million of net income on that. So they're literally potentially going to be profitable next year. So it's probably just such a sudden change to the fundamentals that it's being priced in. That being said, at a 3 billion market cap, it is probably a tough buy, like risk to reward wise, buying this right now at all-time highs. But I can kind of understand why it's at all-time highs. I guess it's just pricing in the future growth of revenue is going to double. They're basically going net income positive. So I can get why people like this one, and it's like their materials are used for semiconductor equipment. So interesting name here. Congrats if you own it. I just don't know how the risk reward looks about buying it today. And since they're not profitable, there is no forward multiple we can look at. But as long as they keep on beating those top line expectations, they'll probably just continue the momentum. What's your opinion on swarmers? Hey, Vulcan. Yeah. Hey, what's up, guys? If you have a stock you want to look at, let me know. Give me a ticker symbol. I saw SoFi. Yeah. What's up, Steven? Yeah, let's do SoFi here. And then we'll look at, I see Visa. Visa's a great one. What's up, Isaiah? Dollar Tree, or I think that's Digital Realty or something. We'll check that one out too. So here's SoFi Technologies. This is actually one of my favorite buys right now, but you don't want to buy this one meaningfully yet. You just want to nibble on SoFi right here. A lot of people think SoFi is just some meme momentum stock, but no, SoFi has real growth to them. And let me show you the metric you look at. If you're a SoFi shareholder, the metric you want to look at is the financial services, because this is what's crushing analyst expectations. No analyst expected it to be this growthy and this consistent with the growth. I mean, look at these year-over-year growth rates all in the middle. It's just incredible. It's up 80 after 85, after 142, after 80, after 600. So just incredible growth rates where analysts expected it to grow, but not at this rate. And we can see the analyst expectations. That's this orange line down here. They beat on revenue every quarter. They beat on net income every quarter. But they've been having a little bit of issues right now because they are issuing some shares but that's just what SoFi does. They issue shares to and then lend it out. And also, yeah, Muddy Waters Research discloses a short position on SoFi, alleges $312 million in unreported liabilities. I mean, that's not a big deal. 300 million of liabilities. They're going to be making 200 million of net income next quarter. So yeah, here's why I just think people are really starting to take SoFi serious. I mean, they really do have good growth. The revenue just hits a record every year, every quarter. Same with net income, or at least the net income expectations. It's supposed to go to a new record next quarter. And yo, Ulysses, good to see you, brother. It's been a while. Thanks for those 50 roses, dude. I really do appreciate that. How you doing, Ulysses? But yeah, that's what I like about SoFi. They're profitable. I'm okay with the dilution because look, even if they dilute you again, that's reflected in earnings, earn EPS because that's earnings per share. And if there's new shares, the earnings per share will go down. Like the EPS is still great. Did that beat expectations or? Yeah, they still beat, even though they diluted you. Again, EPS includes dilution. They still beat on EPS and the EPS projections are higher. So it's not like they're down because they're missing on some financial metric. I literally think they're just down because of some dumb short position. Again, I do own a little bit of SoFi. It's one of my biggest regrets selling SoFi. I might actually finally be able to nibble it a little more because I'm still like up 200% even after this little dip here. But SoFi's great, great, never sell. I just nibble on it here. The risk reward is starting to look real good. Yeah, what's up? Let me do Visa actually, because Visa is one of my favorite ones. What's up, Open? We'll look at Wealthfront, Microsoft. Yo, y'all got some good picks here. Visa's another financial stock, kind of like SoFi, that I think is just such a great risk to reward. This one's like more quality, and Visa expands partnerships to launch stablecoin linked cards. So one of the reasons Visa actually fell on this day, or like they had this huge gap down, I remember it, and this gap down this day right here, because they were being kind of out innovated by crypto stablecoin cards. Basically, if you go to Kroger, Walmart, whatever, you use your Visa card, they basically get a 3% fee, 1.5% from you, 1.5% from the store. And basically certain stores like Walmart were eyeing this new stable card to not pay Visa, basically that 1.5% fee. But that was kind of the thesis hurting Visa, but it looks like they're not going to be out innovated by this. They're launching their own stablecoin card, and the fundamentals are so strong here. Like I think it's the worst it's priced in, especially at this forward multiple. If you buy Visa now, you're only paying 22 times net income. That's super fair for a quality cut. Like so many people use Visa, and actually I think they're more of like an international company. Yeah, look at that. 60% of the revenue is actually international. I always thought the US was more, but the US is 39% of the revenue, still a good chunk. But anyway, check out this bottom line. This is what's so impressive. They literally make like over $5 billion of net income a quarter, $5 billion of after-tax net income a quarter. What do they do with $5 billion? Well, they pay a dividend, and that dividend only costs $1.29 billion. So they actually have a lot of room to raise the dividend. Like they could double the dividend right now. They're just smart and they choose not to, and instead invest in the business and do share buybacks. That's the other great thing. If you look at the top here, they're doing $3 to $5 billion of buybacks a quarter. I can't tell you how great that is for you as a shareholder. Net income's up 14, but net income per share is up by 17 because they bought back over 3% of the shares, plus in your 1% dividend. It's just the risk reward looks really so good on Visa, not financial advice. So yeah, I'd absolutely recommend that one as like a nice stock to diversify into. Hey, what's up? Let me do Wealthfront real quick, then we'll do Microsoft. I see some good ones. SoFi should I hold? Yeah, I definitely wouldn't sell SoFi right here, but I wouldn't go crazy at right now's price. Like I nibble, but I wouldn't buy too much SoFi. So here's Wealthfront. This is another actually fintech stock. I think they're a Canadian brokerage, headquartered in California, but I'm pretty sure Wealthfront. Yeah, it's like basically it's a Canadian Robinhood. So here's Canadian Robinhood stock. They're actually not worth much. They're only worth 1.2 billion. So that's still a bit of a small market cap. And the growth looks good. I mean, 96 mil of revenue on this 96 mil of revenue. They had their IPO adjustment this quarter, but normally they make like 35% net margins. Yeah, look at that. Before this one-time IPO fee, they were making like 30% plus net margins. So they're already profitable. So they have a forward PE, I almost bet, unless there's no analyst. Yeah, look at that. So Wealthfront is only at a 15 times next year's net income. That now is like actually cheap. And they beat on revenue this quarter. Analysts expected 92. They did 96 mil. So, yeah, I'm actually really impressed with their forward multiple. Again, don't worry about this quarter because this was their IPO fee. But, yeah, 15 forward PE. I mean, you can't really go wrong with that. So they're kind of like a competitor. Maybe they're just being out innovated by like Robinhood or something, but They really are interesting. Yo, Isaiah, dude, I didn't even see that. Thanks for the 2 hand hearts, Isaiah. I really appreciate those gifts, my friend. He said DLTR. Dollar Tree. Okay, so this is like a defensive name right here. Thanks again for that huge gift there. So Dollar Tree, I'm sure they trade cheaper. Let's see. They're at a 15 forward PE. Yes, they trade at 15 times net income. Usually whenever we go into a recession, historically Dollar Tree kind of does good. Are they how are they doing on profit? So yeah, actually here's their before tax number every quarter. Like as we can kind of see, it hasn't really grown since 2017. How's the stock since 2017 though? Yeah. So actually, well, see, this is why you always look at net income and stock price. It always makes sense. It's at this market cap of 20 billion, the same market cap it was back in 2017, because they're making the same net income as they were in 2017. So the stock has been flat for 6 years, maybe because the profits have been flat for 6 years. And here's the revenue, I guess. Nothing's really blowing me away here. They don't pay a dividend, which I do like. I know Dollar General pays. Actually, I've looked at Dollar General and Dollar Tree. I've compared the two before. I always liked Dollar General more than Dollar Tree, but they still make like 200 to 300 mil a quarter, 15 forward PE. It's just, I don't know. How, are they doing buybacks? I don't think they are either. Net income's up 113, EPS. Oh, so they bought back 1% of shares. Actually, that's not too bad. They bought back 1% of all the shares. I mean, it's really not the worst, but nothing's really blowing me away there. I don't know if that'll outperform, the tech-heavy S&P 500, but it could be a nice one to. And let's see how Dollar General's doing. I'm sure it's probably not just, like look at Dollar General. They're also like the same prices they were in 2018. So it's not just a Dollar Tree problem. Here's Dollar General stock. Guess there's a little double top on there according to technicals. Let's do Microsoft. Yeah. Hey, Isaiah, if you have another stock you want to look at, let me know. Hey, then we'll look at Ross. Hey, I forgot about Ross Dress for Less. But yeah, Nicolo Looney, what's up, guys? Let's do Microsoft. Yeah, for sure. This is one of the best buys right now. Like, not financial advice. Let's see if there's any news right here. Microsoft launches Copilot Health. Microsoft signs letter of intent with InScale. Microsoft reorganizes AI teams. Okay. No real news I'm seeing, or no new news. Okay, anyway, Microsoft, like, this is why I think the risk reward is so good. And yo, thanks, Matthew. Yeah, hey, we'll do QXO as well. Thanks for that, Matthew. I appreciate that. So here's Microsoft on the right. They only trade at 21 times forward PE. So Microsoft, quality behemoth, Mag 7 Microsoft, only at 22 times next year's net income. They own 27% of OpenAI. So you get exposure to AI with this. If you don't have an AI stock, they own 30% of basically ChatGPT and OpenAI. But one of the reasons why Microsoft is falling, like a lot of software names, is because they are a software stock, part of them. That's their main business. 42% of all their revenue is their software business, which I love. Think Excel, OneDrive, Office, PowerPoint. That software suite does 120 billion of annual revenue for Microsoft. They've converted from a hardware company selling PCs to a software company, high margin software company. And not just software, but cloud. They have this Azure cloud that is second largest market share behind AWS. This does over 110 billion of annual revenue for them. So again, I'm so bullish on the cloud. I guess it's just the sentiment around Microsoft that's hurting the stock. Like, they're not missing on any expectations. Like, they're beating on net income, beating on revenue every quarter, but it's just the future I don't even know. I guess it's just like investors questioning the return they'll get by investing so much in NVIDIA GPUs and AI. Like, what will the real return be? But, Microsoft, I'm betting for them. Like, this is a great deal. This company makes like 30 billion of after-tax net income a quarter. They have a better credit rating than the U.S. government. You get a 1% dividend. Like, every company in one way or another uses Microsoft. They invest in the future. They do share buybacks. They do dividends. And the risk to reward looks so good at only 21 times forward PE. It's just these like software, like AI fears hurting them, but they are AI. They own 30% of ChatGPT. They got Copilot. Like, they're going to be a beneficiary of AI, I believe. That's just my answer. But yeah, Microsoft, super good stock. Hey, what's up, Marcus? Yeah, hey. Hey, we'll look at Swarm and McDonald's. Yeah, hey. Heck yeah. So here's QXO. Yo, Matthew, I wish I could give you thoughts on this company, but they just did their merger where, I don't even know how to describe this price action. Basically, like, they were like a blank check company that bought this like roofing company. So yeah, look, they sell residential roofing products and then non-residential roofing products. So they like repair roofs and complementary building products. But if we go to their revenue, like again, we really we only have 3 quarters of data here. So they made revenue the past 3 quarters, but it says like for those 3 quarters they made the billions of revenue, they lost like 100 million a quarter those quarters. So I feel like I need more time to judge this one. Like it's just some sort of roofing building products company. I guess they could. I guess a maybe way to look at a competitor would maybe be like a home builder, like a Lennar or like a Carlisle, which does roofs as well, which I do own, by the way. All this company does as well. If you like that company, I think you'll also love. I've looked at them before. I've also looked at Carlisle. Carlisle sold me. This is a roofing company as well. They literally just repair roofs. And yeah, I'm down 0.9% on them. But every stock, look, here's today's return. Every stock is red on the day. And here, RIP, we're down 5.8% year to date. I love being fully transparent. If you got any questions, let me know. Yeah, I wish I gave you more thoughts on them, but I just don't think I can talk more about QXO. I mean, do they have a forward PE? Yes, no forward PE, $14 billion company. But if you have another stock you can look at, let me know. Or hopefully that was kind of helpful there. So let's look at that Swarm stock. Oh, I'm really behind. I got like 30 stocks to look at after this. Oh my goodness. Okay. Sorry if I missed some of your stocks. I definitely want to get to all these, but there's a big backlog. Ooh, Swarmer. Hey, looks like this just IPO'd, so it's kind of another company. Like, here's the 5-day chart. They haven't even existed for 5 days, but here's their IPO chart. Usually what happens with IPOs is they rally up the day they IPO, and then they kind of fizzle down. They're still a really small company. In the top right, they're only worth $600 million. Seems like some sort of a startup drone company. For the full year 2025, they did 300,000 in revenue. For the full year 2024, they did 300,000 in revenue. I mean, it seems like some sort of momentum swing trade stock. I mean, without more data, I can't really do it. I mean, they can have a cool like website, but we just need like real revenue more than 300. I just don't have enough data to really give you a good conclusion on this stock right here. You just want to be careful because they just IPO'd. And this week, there's going to be so much volatility because it's IPO week for them. That's when there's the most just like movement. So this one's a bit boring, but I love boring companies. And this is one I absolutely own. They're actually I think they're my third largest holding. This is McDonald's right here. I just love their business model. Look at 2008. This was the year 2008 right here. They didn't even dip. Like most stocks dipped like crazy in 2008. Well, McDonald's is actually seen as recession-proof and recession-resilient because of their business model. A lot of people think they're a restaurant stock, but no. McDonald's is really a real estate and royalty company. And that's how their margins are over 30%. No restaurant has a 30% net margin. So McDonald's, they own the land under all the store, 80% of the stores, they own the land under it. So the tenants, the franchise McDonald's, the tenants actually pay rent back to this corporation, this stock every month. And not just rent, but also royalties. So whenever you go spend any amount of money at McDonald's, 4% of that goes back to, or sometimes 5 or 6% in new stores, go back to McDonald's, the corporation, as a royalty. So they legit collect high margin rent and high margin royalty from all these franchise stores, and they're opening up like 30,000 new franchise stores through the end of 2030. So these are all just net new additions. So basically what I'm trying to say is this stock should give you 7% of your money back a year. It won't outperform the tech-heavy S&P 500, but what you should get is, 2.5% stock price appreciation from same-store sales growth, 2.5% dividends, 2% share buybacks. So yeah, I got McDonald's. I'm up 10% all time on them, and they're a nice little defensive stock to buy, whenever, tech is doing really bad. Usually McDonald's does a little better. I guess not today. They're a little red as well. But I guess everything's red on the day. So yeah, McDonald's, I do own them. But yeah, 25 forward PE. I think it's cheaper. It's pretty good. All right. Yeah, hey, no problem there, Matthew. And oh yeah, I said I'd get to Ross. I'm so behind here. Here's Ross. Yeah, I'm actually surprised on how good this stock is done. Y'all heard of like Ross Dress for Less? It's like I don't know, just like a retail store, and they got like they sell, I guess, bed and bath products, ladies and men's products, accessories like jewelry, cosmetics, shoes, Let's see what their net income on this is. Wow, actually, this is really good. This quarter specifically was a record net income. They've never had more net income in a previous quarter. They made 650 million this quarter after they paid 180 million to taxes. So they really did net 650 million after taxes quarter. Every quarter they're easily making like 500 million in net income a quarter. So they can easily like they're printing money. Did they pay a dividend? Yeah. Okay. So I was going to say that they can easily afford a dividend if they do. Yeah. So they have a 0.8% dividend, only a 25% payout ratio. And they're a little expensive though. That's a tough part. I don't know if I'd buy this at all-time highs today. But yeah, 28 forward PE. And a lot of these kind of stores, like boring stores, like Walmart as well, has been doing really well these past couple of weeks because they're just, I guess, like defensive. Like a TJX as well. I don't know if that's like similar to Ross, but like look at TJX. This one as well has just done phenomenal. So, you never think, boring Ross Dress for Less would have such good returns. Seems like for a boring industry, but they really do make like 500-600 mil a quarter. Pretty good. What's up, The Food? Can you talk about the AI and AI not a bubble waiting to pop? Yeah, hey, I don't think we're in a bubble at all. I mean, all valuations on Mag 7s are cheap. You look at any Mag 7, Microsoft, Google, Amazon, Meta. That's it. Like just that could send the S&P, like just those names could send the S&P 500 up so much more. And speaking of Meta, someone said Meta. What's up? EVP. What's up, dude? Yeah, let's do Meta. Can you look at NBA Space? Yeah, dude, NBA Space has been such a good performer. We'll check that one out too, Zone. What's up? And then we'll look at Twilio and some of these other names. I think Kathy Wood loves that stock. So here's Meta Platforms, another one of the best stocks to buy now. And on a technical point of view, I mean, maybe if anyone does technicals, this will be like a triple bottom or I don't know. But the risk reward might look decent going into Meta simply from the fundamentals. Like if we look at their net income multiple, they only trade at 20 times, literally 20 times next year's net income. Like how much cheaper can Meta go? Can they go to an 18? Can they go to a 17 forward PE? I don't think so. Like I really don't see Meta getting much cheaper. Like they print money. They literally have 3.54 billion daily active users. So pretty much half the world is on a Meta app once a day between Facebook, Instagram, Threads, WhatsApp. And why are we looking at the forward net income? Because last quarter they had a total adjustment to their net income. It says they only made 2.7 billion, but they didn't actually. They made their normal 20 billion as a one-time tax charge, which is included in GAAP net income. So anyway, I have no complaints on Meta. Only thing being questioned right now is how much you're spending on AI. They just guided to spend like 40 billion a quarter for the next 4 quarters in a row. So, but I really like what they're doing. They say, they're working on the Meta Ray-Ban glasses, which have had great results. They're working on a smartwatch. But yeah, their main core business, which is ads, is so good. Like the average Facebook user makes $50 a year. They're putting now ads to Threads and WhatsApp. So that's just going to be like net income for them, like new revenue streams for them, like just putting ads on an app now. So I'm really bullish on Meta. I have no real bad thing. I actually, if they cut the CapEx of AI spending, the stock would go up like crazy. And that's what they did last time. There's going to be some random day in the future where they're going to be like, all right, we're cutting back our AI spend and then the stock will go up. So even if they don't cut back the spend, it's still a good buy, not financial advice. Yeah, Mark Zuckerberg owns 13.5% of all the shares. It's a good stock. I do own them. They have a dividend too. I'll show you my position. I'm not up too much. And we're only up 14% on Meta. They're down 2% on the day. Hey, we got a little dividend coming in from Meta. But yeah, really good deal. I can't believe it's at a 19 forward PE. Hey, what's up, Luffy? I appreciate you. Thanks for that. Or LIFU, I mean. Oh, yeah, let me get to MDA real quick. There's a few space stocks. Like I saw SPCE. The best space stock, or one of the best ones I really like is MDA Space. They just IPO'd, or they just switched exchanges. Now they're they're a Canadian company. So let's convert the currency to US dollars just to get a better idea. Okay, I'm on the wrong ticker here. Let me go to the Canadian one. Is this the one that loads it in? Yeah, okay, here we go. So here's the one with the financials. Oh, and I guess there's some sort of news. MDA Space completes 300 million US IPO. Yeah, they're dual listed. MDA Space pipeline doubles to 40 billion Canadian billion, driven by defense demand. MDA Space awarded 32 million Canadian defense contract for ground-based space surveillance. So yeah, they own a bunch of satellites. Let's see if we get an earnings hub analysis on this company. Okay, cool. Satellite systems led revenue growth supported by major programs like Telesat, Lightspeed, and Globalstar. Oh, they have a backlog. Look at number 3. The backlog reached $4 billion, providing solid revenue stability. I love companies with backlogs because, yeah. So literally the whole company's worth $5.7 billion. They got a $4 billion backlog. And check out the revenue growth. This is why the stock has had so much good momentum. Like, this is why they're not stopping, because the numbers look so good. I mean, this quarter, as we can see, record revenue. It's never even been close or higher before. $360 million. The first time it's ever even been over $300 million. And not just the revenue growth, but they're making net income. They're already net income positive. There's a ton of space stocks like Rocket Lab, ASTS, Lunar. They all lose so much money, but not MDA. They're already profitable, making 20 mil a quarter. So pretty cool. Maybe we can check out their website well, anyway, some sort of Canadian satellite space company, big backlog. I like their numbers. All right, let's do Twilio. Actually, I don't even know the ticker symbol for that. Hey, the guy that's saying Twilio, give me the ticker symbol for that. I don't even know. I've never even looked at that stock. I just know Kathy Wood owns it. Have you had David Bars before? I have not. Eli Lilly. Yeah, this is a company that's really beaten Ozempic at its own game. So one of the reasons why Eli Lilly has done so good is because of their weight loss prescription. They have a weight loss prescription called Zepbound, and they just tested it against Wegovy and Ozempic. They literally have a better weight loss prescription. Eli Lilly meets phase 3 endpoint type 2 diabetes trial, demonstrates 17% weight loss after 40 weeks. All right, well, anyway, look at this forward PE. This is the crazy part. This is why I don't think Eli Lilly is expensive. Actually, they are in a little dip right now. So this does actually make an attractive opportunity to maybe nibble. Don't go crazy yet, but if you look on the right, they trade at 28 times next year's net income. Only 28 times. And they used to break down their revenue stream. I wonder if we can find this actually. They probably removed it. Oh, well. But anyway, yeah, 28 times forward PE. Here's their net income right here. This is great as well. Or actually, I should look at this, the non-adjusted numbers, like record profits this quarter. Like no wonder this past year they've had so much crazy growth, because they've had so much crazy growth in the profits of the business. I mean, basically the net income's up 58%, after grew 84, after grew 45. So they're on a streak of net income growth. I mean, really good. You get a dividend 2.75% yield. They invest in the future. Let's see if we can find any. I wish I had the KPI data. Eli Lilly Japan invest. Eli Lilly announces $3 billion China investment, partners with Pharmanon for oral GLP-1 production. Oh yeah, they're working. So right now they have Zepbound. It's an injection. They're working on a pill version, weight loss pill. So anyway, big weight loss prescription, potentially the best weight loss company, because they're beating Novo Nordisk, got their own game, and their patents don't expire in 2028 and 2030. All right. Ooh, I'm so behind here. Get in early on the IPO. Get in early before the IPO. I don't know about that. I'd be careful on the IPOs, because usually they like the stats, like 80% of IPOs do bad their first year. Okay, well, anyway, here's Monster Beverage. This is or just certainly for IPOs, almost always you see them rally up the first week and then they just tank. So it's tough getting in before an IPO. And plus, if you get in before the IPO, you can't sell your shares. There's something called a lockup period. You can't sell your shares for 90 days. And if you do, they'll penalize your account where you can't ever buy an IPO again. So that's a tough part. Whenever you buy something before the IPO, they don't let you sell it for 90 days. And usually in the first 2 weeks or whatever is when they have their crazy bump up in price. So hopefully that was kind of helpful there. I wonder if I can find that. Let's actually see IPO access. So oh yeah, Robin. I wonder. I can't find it. I want to see all right, well, we're not going to look for it. But anyway, let's go look at some, or Monster Beverage right here. So yeah, Monster Beverage, this is a really good company. They're still a little expensive, a little pricey. Right now, price is like 32 times forward PE. But they have the #1 energy drink market share. I like Monster energy drinks, Let's see if there's any news. Monster Beverage co-CEO sell shares. Okay, oh well. Doesn't matter. So yeah, Monster Beverage, they're a little expensive at a 32 forward PE, but look at their Monster energy drink brand, which is, 92% of all the revenue. It just hits a record every year. Like this quarter specifically, this is great growth. I mean, they used to have like low single digit growth, like 0.7, 4%, 0.8. But now the revenue growth is at 19%, 19% growth. That's good double digit growth. So I think this quarter, yeah, they did beat on expectations. They expected 2.04, they did 2.13. The future expectations are just up and to the right as well. Yeah, net income's supposed to go to 568. That'll be a record. They've never had 568 before. Yeah, if we just zoom out to the net income on Monster, it looks good too. Like easily, they're making like 500 mil in net income a quarter. It's pretty ridiculous. So yeah, and they get a bunch of free advertising. So unleveraged balance sheet, literally no net debt, like basically no debt, call it. So fortress balance sheet. They do share buybacks. So what are they doing with all this net income that they retain? Well, they spend it all on share buybacks. So I'll actually show you that real quick. Yeah, so look at this. Especially in 2024, they bought back it was crazy. They bought back 300 million or 3 billion of their own stock, and then another 500 million, 100 million, 100 million. So that just that year, they bought back basically 3.3 billion of shares. The whole company is worth 72 billion. So they just buy back a ton of their own shares. They're experiencing some weakness right now, probably because a lot of these names are. I wonder if actual Coca-Cola is struggling because they're the largest shareholder. Yeah. So it's following the same negative momentum as Coca-Cola. Again, if we go to Monster Beverage, if you didn't know this, the largest shareholder is Coca-Cola stock. So if you own Coca-Cola stock, technically you own some Monster Beverage stock as well. They own 20% of all the shares. I actually own the Coca-Cola and Monster bottler. This is ticker symbol COKE, not the main Coca-Cola company. This is the Coca-Cola bottler. They're the largest bottler for Coca-Cola and Monster. So the boring bottler's done amazing as well. Ooh, let's see here. Hey, thanks, Jose. Why don't you day trade? I'm just not a fan of day trading. I love just buying and holding great stocks for the long run. Just not good at that strategy. What's a fair PE? Well, it always depends on the company, it's always, each company is their own story. If the growth story's gone like a Novo Nordisk, I can actually understand why Novo Nordisk trades at like 11 times PE. Like an oil and gas stock, commodity stock, like an oil and gas, it's normal for them to trade at like 12 PE, low teen PEs. But if you're a software stock, you usually get high. It all depends. So here's Broadcom. So this is a stock I'm actually quite bullish on. Broadcom, this is a semiconductor play, but they make the custom chips, kind of like they make the chips for Google to make the TPUs off. So basically they make the TPUs. I think Google is one of their biggest customers. Broadcom launches industry first 400G lane optical DSP for data centers. I want to see, I wanted to find the Google news, but oh well, let me just show you why Broadcom is so interesting. Because if we look at their current PE on the left, they look extremely expensive. 62 PE, which means they trade at 62 times net income. But look at that forward multiple, because this is a growth stock. You always look at the forward multiple. It's cut in half. They went from a 62 to only a 30. So their net income is literally going to double in the next year. That's why, you don't look at right now's PE and to call this one crazy expensive. So if we go to these net income projections, check it out on the right. In 2 quarters, it's going to be 11.9 billion, or basically 12 billion in net income. If we look at their net income right now, it's never even been close, any quarter ever, not even been close to 12 billion before. So they're still going to see, actually, it's going to go from 4 billion to 12 billion. We're going to see a 300% increase in the EPS. So that's why the forward multiple is only at 30. And you really want to do like a multiple year out forward multiple, or like a PEG ratio. Also, they have this VMware business, their infrastructure software. Oh, I guess it did slow down a little bit. Weird. It only grew 1.37%. But I guess that's after it grew. Like if we look at this on an annual basis, it's really impressive. Like 2023, it was 7.6 bill. Now it's 27 bill. So, and that's just that business. But their semiconductor business, this is what's really picking up the slack. Look at this year-over-year growth rate, 52%. After, used to grow like mid single digits, sometimes like double digits, but now like 52%. And they're not stopping, net incomes go to 12 billion. So it's kind of like Nvidia with the higher yield, a 0.8% yield. And there's a lot of demand right now for these custom chips. People are alternating away from Nvidia because there's Google's making their TPUs, Amazon's making their own TPUs, and now Meta, even like Rivian's making their own chip and they're a customer of them. So kind of interesting. All right. Let's see here. Yeah, sorry if I'm behind on some stocks here. I definitely am. DXYZ is Destiny 100. Destiny Tech 100. Is that like an ETF or no? It's a stock. Okay, very small company. If you look at the top right, they're only worth $360 million. So no, I go to analysts. No analysts cover this one. Are they? They must not be US because they report weird. They report in halves. Let me just verify that. No, they're huh. Headquartered in Texas. Well, anyway, for the first half of this is why I don't know. I would not buy this company. The full year 2025, they did 17,000 of revenue, and it says they made 5 million in net income. That's quite a bit deceiving because they didn't actually. If the revenue was 17,000, how'd you make 5 mil of net income? Some accounting trick. Maybe they sold off an asset or something. But yeah, I don't know. There's no forward PE. $360 million company. They have a good balance sheet, though. It's probably from share issuance, but good balance sheet. So no debt. That's a great sign. They have no debt to pay. Huh. I just don't know. I just want to say, I just can't really trust a microcap this small that did 17,000 revenue. I just like, I wish I'd give you more thoughts on them. You got to be real careful. Hey, what's up, Eric? He said, would you buy App at this price? Since I'm already a shareholder of AppLovin, I'm not going to add any more. It's actually, hey, Mike, we'll do Twilio next. Or Twilio, I got you for sure. What stock were we just looking at? Okay, AppLovin, yeah. I just bought this company. This is one of my favorite stocks to buy on the software dip. So when we were at like peak software dip, this is one of the stocks I bought. So would I own AppLovin? Absolutely, because I do own them. And let me show you why I so love this stock right here and why they're still, even at this price, like not even expensive. If we go to the forward PE, it's only a 28. Like that's pretty fair. I mean, if you look on the left, they're 44, but you always look at forward because they're a growth company. They print money. And I mean, they're an actual money printer. If we go to their net income this quarter, or look at the trend of net income, it's just up and to the right, hits a new record every quarter. They did 1.1 billion of net income. Well, here's the ridiculous part. The total revenue was 1.6 billion. So on this 1.6 billion revenue, they netted after paying over 180 mil of taxes, 1.1 billion, after tax, which is so insane. So that means their net margin is a 66%. This is a margin expansion play. I mean, they literally print money, better net margin than NVIDIA has. So if you go spend $100 on their ads, they keep after tax $66.50 of that. So they print net income. They do buybacks. They're even potentially going to partner with OpenAI for advertising. So yeah, insane margins, insane free cash flow too. Yeah, the free cash flow was 1.3 bill. Net income was 1.1 bill. In the future expectations aren't expecting it to stop. Net income is going to go from 820 to 1.25 billion. It's supposed to just hit a new record every quarter. So really, that's why I bought AppLovin. 28 forward PE, great numbers, good margins. It's really just, they impressed me there. So let's do Twilio here. What was that stock? TWL. Yeah, hey, try not to spam there. Whoa, hold up here. Hey, we'll try and get to all these stocks here. So wait, TWLO, Twilio. So yeah, this is a Kathy Wood stock, software name. It kind of reminds me of like a DocuSign and a Roku, where they did crazy good in 2021, but they just haven't recovered since. So where the stock is the same price as they were back in 2019. So let's see if they deserve that. So they are trading, okay. So sadly, they still might be a little expensive. I mean, 71 forward PE. Yeah, so they must just now be getting net income positive, if I had to guess. Yeah, so look at this. This was a really hard buyback here. They were losing like 100 mil a quarter, but now we're in a scenario, well, they did go back to losing money again this quarter, but potentially by the same time next year, they're maybe going to be making net income every quarter. Let me actually see the net income projections. Okay, so yeah, this might have been a one-time adjustment, but yeah, look at the future. They're supposed to make 60 mil next quarter, 60 mil again. So yeah, they're supposed to stay net income positive. They have a great balance sheet too. Let's see that net cash position, 2.5 bill of cash and $1 billion of debt. So they have 1.5 billion in net cash, and the whole company's worth 19 billion. Let's see, do we get any results? So revenue exceeded expectations, driven by strong sales execution and customer growth to over 402,000 active accounts. Free cash flow surged. Well, Well, hey, anyway, I wish I could give you more thoughts on them. They might be a little expensive even at a 71 forward PE. Out of all but notice like all the software names are tanking. This one actually isn't tanking as much. Out of all the software names, I did buy some other ones. They do small SMS, email communication and such. I own a marketing agency and see tons of developers using it for their new platforms. Oh, that's pretty cool. Yeah, I mean, look at this revenue growth. I mean, like there's no sign of this stopping. I mean, this is incredible revenue growth, especially from like 2018. It used to be like under 100 mil a quarter. Well, now it's 1 point. It literally was a record this quarter, never been higher. And I bet the analysts are I keep swiping over on accident. I bet the analyst expectations are, expecting the revenue. Look, they beat on revenue for the past 3 quarters in a row, and they're expecting the revenue just to continue climbing higher. And they're beating on EBITDA. So yeah, it's really, you should look at net income because they had a one-time adjustment. You should look at the EBIT and they beat. So they're beating on every quarter. So it's really just the software thesis that's still hurting them, and maybe just the fact that the forward PE is still a 71. It might be a little still pricey here, but the fundamentals look good there because they are profitable now. What app is this, please? Yeah, hey, if you want to get this app I'm on, or this is actually a brokerage, or it's where you get stocks on. So if you want to get it, it's actually the very first link in the link tree in my bio there. It's an affiliate link, full disclosure. All these apps are. They're all brokerages where you buy stocks on, but that's the one I'd recommend the most because it's free, costs nothing, and has the best analysis tools. So very first link there. It's called Moomoo Brokerage. Okay, let's see here. Deborah said CIEN, and I see Dutch Bros. I think this company just got added into the S&P 500, and Nvidia took a stake into this stock. Oh, we'll do Tempest AI. Yo, I'm so sorry. Yo, Ben, we'll get. I'm sorry if I'm missing these names. I got to get to these. I'm sorry. So here's Sienna. This is there's no news. I think this stock just got added into the S&P 500, and maybe Nvidia took a stake into this stock. I can't remember. But let's go look at their fundamentals. So they do networking platforms. Well, that grew great. That grew 39% year over year. That's very good. So they beat on revenue. They beat on net income. They beat on EBIT. So they really had a triple beat of a quarter. So they did 1.43 bill of revenue. They netted 150 mil on that. So they are net income positive every quarter. So networking platforms, is it like a software? They put this one in communication equipment and 5G optical communication equipment. Maybe we can check out their website just to get a better idea of what they do. Actually, this website's not helping us out too much. Well, so they do hardware, software, and services to network operators, as well as to enabling, well, we're not going to read all that. But anyway, some sort of a networking company, a little expensive, so at a 79.4p, but there's obviously some sort of reason they're at an all-time high today. I mean, a lot of stuff is struggling, but this is at a crazy new all-time high. I don't know if this is like, this might be part of the memory shortage stocks. I don't know. I don't think so, but pretty good numbers there. Looks like the growth is finally back. Their main business is up 39%. So JJ or JIR said NDAQ. Yeah, this is the NASDAQ. So a lot of people, when you say the NASDAQ, they think of the QQQ, the NASDAQ 100, but that QQQ actually pays royalties back to the NASDAQ, the actual stock exchange company. So here's the NASDAQ. Yeah, they're not even expensive, only at 27 times forward PE. So they only traded 27 times next year's net income. They have a 1.24% dividend yield, safe payout ratio. They raise it every year. Here's their bottom line. This is great. It really is. 518 million, up 45%. Look at these year-over-year growth rates at the bottom. Up 45, up 39 after 103, 69, 81. So really good net income growth there. 27 PE, good balance sheet. You get a 1.25% dividend yield. Gee, this is an interesting company here. Yeah. Capital access platforms. It's a niche name. Like, how much competition does the NASDAQ have? I don't know. Here's, I guess, what the bulls and bears are saying. Let's see what y'all are saying. Hey, what's up, Chief? And yo, Mike Murphy, what's up, dude? Hope you're having a nice day, too. I appreciate you, man. Let's see. Is there any way to make money when most stocks are down? What do you think about trading penny stocks? Yeah, I'm not a big fan of, trading especially micro cap stocks, but I can swing trade sometimes. But yeah, the best thing to do is just buy great companies on the dip and just watch them appreciate over time. That's what all these super investors like Buffett, Cathie Wood, Soros, Nvidia, everyone, like, you pick a basket of great high quality stocks you want to buy and hold for the long run. Yeah, hey, the very beginning of the stream, the one stock I really not financial advice recommend is AbbVie right now. I got 3 shares. I'm down like 5% on it. And get in 5% lower than me. It's a dividend growth stock. You get a 3.4% yield and about 3% stock price appreciation every year on top of that. So let's check out LGVN stock. I saw that one right there. This is Long Evron or something like that. So we shouldn't even cover this name. Yeah, if you look in the very top right, their whole entire company is worth 32 million. So it's just such a small market cap where it's hard to trust. 32 million is what the whole company's worth. They have revenue. So that is not what you want to see. So the revenue's pretty much nothing. I mean, 130K of revenue, down 80%. So the revenue, the lifeblood, the sales of the company, they only did 130K of revenue. And on that, they lost 7 million. Here's the bad part. Just kind of think about this very logically. Let's say you buy this whole company. You could do this. You buy the whole company for 33 million. That's what the whole company's worth. So you buy it for 33 million, or you're buying an asset, a business that made 130K of revenue and lost you 7 million. Again, 7 million when your whole company's worth 32 million, that's like 20% of the whole company. And it's not just this quarter, like every quarter, then another 5 million, 5 million, 4 million. And whenever you lose net income, that money has to come from somewhere. So look at how their balance sheet just gets drained, all the cash on there. So this is a classic, pump and dump micro cap. Don't touch that one unless you just want a short-term momentum swing trade it. There's no buy and hold thesis there. But those are the kind of stocks people like to, I guess, sometimes like trade and stuff for the momentum. But yeah, I would be real careful. Hey, what's up, 6-star? He said Dutch Bros, and then we'll do hey, what's up? Call me. I am really behind here, so I apologize. But yeah, Dutch Bros, this is a better buy than Starbucks for sure. I enjoy going to Dutch Bros more than a Starbucks. They have a franchise model, which I like. So most of the Dutch Bros you see are company owned. So 92% of this business's revenue are company owned shops. And we can see the annual trend of this. This is what you love to see. It's wow. It's up 30% after year 38, after year 30. So, for a restaurant in this tough environment, because all restaurants are in a tough environment right now, this is pretty impressive. So company operated shops are up 30, but more impressively is this franchise revenue. So they basically collect royalties. If you go spend like any amount of money at a Dutch Bros, if it's a franchise, like 4% of that transaction goes back to like the parent company as a royalty or something like that. That is up double digits, up 19% year over year as well to 34 million. It's never even been 34 million before. So this was a record revenue franchise. And the analysts are really excited to see, look at the revenue. It's going to go from 415 to 515 in 2 quarters. The revenue is supposed to, like you can just see it, the revenue is going to go up. They're supposed to make 41 million net income. That'll be a record net income. The net income is pretty much supposed to double. So, yeah, really impressive stuff on Dutch Bros. I have no complaints. I guess maybe the valuation is still a little pricey. Let's see here. Let's check that out. And the restaurant environment is still tough right now, but if I was going to buy the dip on one, this one certainly looks like one of the better ones. So yeah, still a little expensive at a 53 forward PE, but they deserve it because of how fast they're growing. You really want to do it like a PEG ratio, multiple year outgrowth rate. So interesting name there. Hey, what's up, Brian Paul? What stocks did you buy on the dip last April? Well, that would be last April would be every single stock that you see on the screen here, like Comfort Systems. That's when I bought this stock for the first time. That's when I bought Coca-Cola Consolidated for the first time. That's when I bought Amazon for the first time. That's when I bought Amphenol for the first time last April. So really, dips, like you always got to take advantage of them and almost like shift your lower quality names and turn them into high quality names. Oh, wow, the market. Whoa, hey, look at that. We're seeing a little bit of a recovery. Let me check the Qs. So I don't know what just happened. War's over or something. I don't know. But hey, looks like the NASDAQ just popped up a little bit. We'll come check that out in a little bit. Let's go. Oh, let's see here. All right, let's see. Oh yeah, NetEase. What's up, Open? He said NTES. This is a niche video game company. Hey, then we'll do yeah, maybe a tweet or something. We'll do what's up, Ben? Any opinions on VG? Hey, Ben, what's up? We'll do VG next and gold and some of these other ones. Any recommendations for non-US citizens because you have to pay a 33% on dividend stocks? Yeah, I don't know. You should find an ADR That's the same for me. If I wanted to buy a Canadian stock, I'd have to, or a European stock like Ferrari, I'd have to pay a withholding dividend tax. But actually, that tax, I'm pretty sure, I don't know how it works in your country, but it's actually a write off as well. So you don't like really pay it. I, I you still like benefit from it. But okay, let's do NetEase. This is a video game stock. They own Marvel Rivals. Oh yeah, this is great news. Apple, and this is because of frickin' Fortnite. Like, does anyone remember when Fortnite first came out? Fortnite got taken off the App Store because of these fees. Well, finally, Tencent and Disney lawyers backed up Epic Games. So Apple reduces App Store commissions to 25% in China. Google cuts Play Store fees. And NetEase expects to see a 2 to 3% profit boost. Literally, these commission cuts go straight to the bottom line of companies like, think of Spotify, NetEase, something like that. But yeah, look, this is a Chinese ADR, so do beware. That's probably why they're such a low multiple. But yeah, look at that on the right. Only a 13 forward PE. Oh, does Morningstar cover this one? Oh, hey, check that out. And here, yeah, here's what the bulls say. The overseas success of Marvel Rivals. Yeah, NetEase Cloud Music is experiencing rapid cost leverage, which could drive further profitability improvements for the parent company. Interesting name there. So I guess they're in music, 13 forward PE, online game revenue, 3.14 billion, games and related value-added services. Oh yeah, here's their cloud, NetEase Cloud Music. Yeah. Oh, I guess it's down 2% year over year, but maybe I guess there was some good news in the news. I know about this company because they pay actually a little bit of royalties back to Disney for the Marvel Rivals licensing of the characters and stuff. But yeah, they really do make, if we average it out, like over $1 billion in net income a quarter. Fortress balance sheet. You get a 2.7% dividend. So it's a video game Chinese ADR. And I like the fundamentals. I so wish they were a US listed company, but just judging them off the fundamentals, nothing's wrong with that company. I do like them. And there's the tailwind from the App Store. And yo, what's up? Shout out to member Brian Paul. All right, let's see. Hey, what's up, Trevor? Good to see you, dude. No way. All right. What did I see? Oh yeah, VG. I said I'd get to that one for you, Ben. What's up? So Venture Global looks like this company's hasn't been public for too long, like a year and a half. I guess let's see what they do. So they're at a 15 forward PE. Oh yeah. So basically, I actually remember this company. They have a bunch of like projects under development and that like they're just now getting their first ever sort of revenue for it. So yeah, this quarter they did 4.45 bill of revenue. And on that, they made 1.7 bill. Let's actually check out their website. I remember they had some like pictures of their like these huge, okay, they're trying to get my cookies. But yeah, here are all their projects. Like the Plaque Mines, I think this is their like most profitable one. I don't know if it's like I think like a LNG natural gas project. So I guess here's where it is. It's in Louisiana. Gulf of America. Oh, wait, did they call it that? Gulf of America. Okay, well, there you go. Some sort of natural gas play, only a 15 forward PE. Revenue supposed to go from 3.1 to 3.8. Yeah, average, you're supposed to make like 500 mil plus a net income a quarter. So interesting. And it's a low dividend, low payout ratio. It's a niche natural gas play. I got Constellation Energy as my natural gas play. All right. Yeah, big rally this past bit. Yeah, I wonder what happened there. Yeah, 10 cents, another great one. Just buying, saving your income, and wait for the market to recover. Yeah, I agree, YouTube agent. He said GLDM. What's GLDM? SM is a gold mini shares trust. Oh yeah. So basically, oh yeah, we've looked at this one before. Here we have the price of gold, the commodity of gold, GLD over GLDM, and as you can see, they move exactly the same. So why would I buy GLD or GLDM? Which one's the better one? Well, GLDM has a much lower expense ratio fee. There, every year you'll pay 0.1% of your total value of your assets or of this everything you have in this ETF. You'll pay 0.1% in a fee. But if you buy GLD, you pay 0.3%. So it's 3x higher fees technically. So yeah, that's a good way to get lower expense ratio fee gold. Oh yeah, hey, what's up? Picao, and I probably said your name wrong. But yeah, Tempest AI, this is one that Kathy Wood actually just bought. This is actually like my favorite gene splitting company. You know, there's like CRISPR Therapeutics and all those, but Tempest AI is the real best one. They're in, what's it called? Like genealogy or what? They used to have an exact name for it. What they call it? Used to break it down. Oh, genomics. Okay, yeah, the genomics. So Let's go look at their actual earnings right here. So their diagnostics, so their diagnostics business revenue more than doubled to 266 million, driven by increased oncology and hereditary test volumes. Pretty nichey. And then they also have a data and application software business that grew 25%, with data licensing surging 69%. Data licensing, that sounds pretty good. So you don't really look at the net income, you really just focus on the top line growth because that's what's blowing away expectations. If I could get this to load here. Sorry, my thing's a little slow here, but yeah, look at that. Like, that is why a lot of people like this stock. They really do have good top line growth. The only bad part is the net income, because they still lose like 50 mil a quarter. So we definitely want to see them start to narrow those losses. But when you're growing your revenue 80%, like at this crazy rate, it's okay. And yeah, revenue is supposed to go from 314 to 380. Actually, well, they're not supposed to get net income positive anytime soon either. So they don't have a forward PE. Maybe it's just a margin issue. Let's see. Tempest partners with Blood Cancer United over patient registry. So yeah, some sort of diagnostic testing business, or I don't know, genealogy, something like that. Hopefully that was kind of helpful there. Ooh, JP Morgan. This is a great bank, dividend growth stock as well. Hey, then we'll do FN. And hey, what's the ticker symbol for NAVAN, Mike? I'll check that one out. Check. And we'll do 10 to 2. So here's JP Morgan. This is a bank, one of the best performing banks, too big to fail at this point. You get a great dividend. You buy the stock right now, no matter what, you're getting 2% of your money back just in a qualified dividend every year. And look at how fast they raise the dividend every year. So you're going to get paid more and more. That keeps up with inflation every year. Obviously, we all know JP Morgan. They're a commercial investment bank, consumer community bank, but they also do wealth management services. I love this business because, they just collect basically a high margin fee every year or every quarter on the assets that they manage for people. And here's their after-tax net income every quarter. This is what's so crazy. They really do make like 13 to 14 billion of after-tax net income a quarter. And then we could just zoom out. Like JP Morgan is just always printed like 15 bill in net income a quarter. So that's how they can pay dividends. That's how they can do share buybacks and invest in the future. Is there any news around JP Morgan? JP Morgan halts 5.3 billion Qualtrics debt sale. JP Morgan issues. Yeah, JP Morgan tightens private credit lending. 1.6% charge-off rate. Well, anyway, there's some facts about JP Morgan. I think they're a good deal. I forgot to pull up the multiple. Banks always trade cheap. Let me see what their forward PE is in the middle. Yeah, 13 in the very middle, a 13 forward PE. So their net income is expected to grow as well. Pretty good. What was this one? Oh yeah, FN stock. FN. This is Fabrinet, a really cool company benefiting from data centers now. And first off, congrats if you own this one, because this stock is pretty much at an all-time high today, or pretty close to it. They're up 7%. They're still expensive. That's the tough part. Still at a 37 forward PE, but they're experiencing massive growth from many businesses, like the data center interconnect business, which is now 12% of all their revenue. Check out how that grew. It went from 71 to 142 mil, in crazy growth there. Yeah, Datacom, how'd that grow year over year? Oh, I guess low. Well, do beware. This one's down 7% year over year. High performance compute. So let's see. Look at that. 15 mil to 85 million, a 455% increase. So, and then look at this net income. Actually, let's zoom out on that net income. Let's see the trend of that. Record net income this quarter specifically. It's never been higher. 112 million just this quarter. Pretty insane. And revenue's also at a record. So that's just a great growth stock. I've looked at their investor presentation before. Like, I love how diversified all their businesses are. They're in like so many different industries, like data centers, automotive, Datacom, all those. Trusted manufacturing partner of the world's most demanding OEMs. So yeah, they're in many. Yeah, aerospace. What's their aerospace products? Can we view that? Anyway, pretty cool stock, growth stock with some good fundamentals. Already good net income too. All right. What was this one? Wait. I don't know if I can find that stock right here. Wait, NVN. Let me just type it. NAVAN. Here we go, NAVN. We found the stock. I hope this is the right one. Hey, and then we'll look at Hermes. What's up, Ben? Yeah, What do you think about doing this research on IPO? Um, yeah, IPOs, I'm not, I've never bought it. First off, if you buy an IPO before they IPO, like before that, you can't sell it for 90 days. There's a lockup period. So you can't sell your shares. And normally the first week or two is when the IPO has its craziest rally. So I don't know. I'm just personally not a fan of IPOs. Or it's just a way to it's basically a trade. You're like, I'm just gonna make money trying to swing trade this IPO. I don't know. It's not like a buy and hold thesis, or I don't know. It's just a tough. Here's Navan though. They're worth $2.25 billion. Like they're pretty much at an all-time low today. That's unfortunate. What do they do? I don't know. So they're a software company, cloud-based technology. Wait, did that say for travelers? For travelers. Huh. Travel and expense management. So you can like travel. Maybe this is for businesses too. Huh. So software travel help company. Revenue this quarter was 194 mil. So that's a lot of revenue actually. It's up from 150 mil. And they did lose money. So they're not profitable yet. That's the tough part. So they won't have a forward multiple. Yeah, the negative 12 forward PE. Oh yeah, so here's the net income projections. They're supposed to lose 60 mil, 50 mil, but the revenue did beat, supposed to go to 188. Again, they just IPO, so there's just not that much data I can look at here. Anyway, seems like some sort of software travel company. Hopefully that was maybe helpful, but I don't know. Oh, is this Tencent Music? I saw this one a few times actually. TME. Yeah, Tencent Music, huh? So this isn't the main Tencent company. I'd rather own Tencent because I think they're the largest. Yeah, they own 53% of all the shares. Whoa, hold up. Did y'all know this? Spotify actually owns 9% of the company. So Spotify is a shareholder here. Did not know that. So this is like another music platform. Let's see, monthly active users. They have 551 million monthly active users, but that is down by 25 million year over year. So they lost 25 million monthly active users, but they're, oh my goodness, they done AFK'd me. Okay. Sorry, they made me fill out a CAPTCHA. I'm back. Okay, what I was saying was they lost 25 million subscribers. Maybe it's because they did a price increase because their ARPU's going up. They used to make on average per user $1.54 per month per paying membership. Now it's $1.67. So their ARPU's growing very nicely. Maybe they rose prices. Here's their net income. And this is in US dollars. You've converted it from Chinese to US dollars. And they really do make, they really do make like 300 mil a quarter. I think they had a one-time adjustment that one quarter. Yeah, so here's their non-adjusted numbers. They really do make like 300 mil plus a quarter. But they just reported earnings. Did we get like a reason? Weekly news. Tencent Music reports Q4 revenue. Declares a dividend. Tencent Music faces intensifying competition from ByteDance's Qishi Music. So maybe that's it. Tencent Music to discontinue their quarterly user metric disclosure. Oh, to shift to annual. Okay. Thought they were just going to, actually, Netflix just stopped disclosing that too. Anyway, yeah, I guess multiple analysts downgrade Tencent Music to hold amid competition concerns. So it's just how you feel about the competition. I don't know. We don't use Tencent Music because we just think we have that tariff or we can't, or I don't know. Hey, what's up, Clem? Good to see you, man. With the war campaign, what do you think are the best 5 stocks? Well, I like AbbVie right now, ABBV. McDonald's is a good one, but these are like defensive names, not like physical defense. But for physical defense, I'd get Moog. I'm down 2.6% on that one. That's a pretty good one, But then I'd get some Mag 7, like Microsoft's a steal. Meta's good. There's some good names. What companies produce chips specifically for military purposes? I don't know about specifically for military purposes, but that'd be Intel. The only one I could think about would be Intel. They're the actual fab manufacturer of the chip. But NVIDIA, they just design the chips. All the chips are actually manufactured by Taiwan Semiconductor in either Taiwan or a Phoenix, Arizona fab. All right. NVIDIA CEO says company is full production of optical chips. So yeah, anyway, yeah, Taiwan Semiconductor, that's I love this stock. That's one of the best ones. Taiwan Semiconductor raises prices on the 5 nanometer chips. All right. Can you do the LSE listed fintech? Wise. Hey, can you give me the name of that company? If you tell me the name of WISE.L, um, or they're just called Wise, huh? Is this it right here? This is an ETF though. Ticker symbol Wise is saying this is an AI ETF. It owns all these, so that can't be it. Huh? I don't know if I can find that. The only one that show or more. Oh, here we go. Is this it? Wise ADR? Huh? Are they Are they a global payment solutions, cross-border payment services? Let me know if that's the one. I think we found it. I think we found it. Let me know if that's the one, and we'll definitely check it out there, Brian. All right, what's this one? Hey, thanks, Dark. I appreciate you. And oh yeah, let's do Hermes. What was that stock? Yeah. Ticker symbol HESAY. Yeah, what's up, Ben? This is a better buy, in my opinion, than like a Nike. Louis Vuitton's another interesting one that I think is good. But yeah, this one's held up way better than Nike, Louis Vuitton, Gucci. They've been like one of the best performing stocks. So, like beauty, like fashion stocks right here. So they are Canadian or European companies. So we'll convert the currency to US dollars to get a better idea of what this company does. But yeah, look at this. 44% of the revenue is their leather goods and saddlery, I'm guessing bags and stuff. And then their second business is ready-to-wear accessories. Other Hermes professions, silk and textiles, watches, high margin business there, watches, jewelry. So here's their after-tax net income. And again, this is in full year and halves because they're a European company. But for the full year 2025, they did 5.4 billion of net income, up 11%. For the full year 2024, it was 4.8 to basically 5.4. Really good growth there. You get a near 1% dividend. What's the valuation? So a 37 forward PE is a little expensive, but they've been actually holding up a lot better than a Louis Vuitton. Look at Louis Vuitton stock. It's it's done way worse. They're cheap. We're at a 19 forward PE. And yeah, they're kind of similar. Fashion or leather goods is half their revenue. They're also in watches, jewelry. But look at this one's net income year over year. The net income for the full year 2025 actually declined 13%, when on Hermes it grew 11%. So that's why I think Hermes is doing actually a lot better than Louis Vuitton stock, because the net income is doing a lot better. It's actually growing instead of declining. Let's hope I can. VLVLY. Hey, we found that one. No way. So Volvo. I'm not a huge fan of the car companies because, it's just a commodity, low margin commodity. So they are actually, I think there's like a Danish or Swedish. Yes, I think Swedish company will convert the currency to US dollars. So they're not listed in the US, but yeah, they sell trucks, construction machinery, buses. Wow, Volvo makes buses. So, but trucks are most of their revenue. Here's their net income. So this is in US dollars. Like they really do make a good amount of net income. I mean, let's see what the margin on this is. So the net margin is, so actually they have a pretty good margin, like a 6-7% net margin. That makes them around $1 billion to $800 million in net income a quarter. So net income is actually pretty good. 2.7%. It's actually a lot better than a lot of the other car stocks. They've actually done way better than a lot of the other car stocks that exist. Like it's done way better than a Ford. It's done way better than, it's Toyota Motor? How's that one done? Toyota Motor. I guess they've kind of done so. Anyway, I'd be careful. They're definitely one of the better ones, but nothing's really blowing me away here. Like I don't know if you'll outperform like the S&P 500 in the long run with that, but maybe. That's the one bet. Let's do it. So here was Wise stock. We found it. So Wise ADR. Apparently they're okay. So they're a British company. We'll convert it to US dollars just so we can get the better idea here. They're at a 24 times net income. They do cross-border payment solutions. And I guess while they hold the money, check this out. Interest income on customer balances. So they're literally earning interest on their customers' cash. Pretty smart strategy. Like that's how the high interest rate environment will help out this company. So here's the revenue. Again, it's in halves. So for the first half of 2020, or actually this isn't fiscal half, so even more confusing. But for the fiscal half 2026, they've done 250 million in net income. Like they really do make good money in US dollars, like 250 mil for the first half. For the full year 2025, they did 500 mil. So they're basically doing around 130 million of net income a quarter. And what's the company worth? 12 billion. So let me do some math here. So we'll do 12 divided by 0.54. That means in my math, they're trading at 22 times forward PE. And they say they're trading at 24 times PE. So anyway, it's a niche one. Oh, so here's, I guess, where the revenue comes from. Europe, excluding UK, Asia Pacific, North America. So some sort of, I guess, cross-border currency conversion. Oh yeah, here it is. I guess you send exactly this, you'll get this. Actually, it's a pretty cool proposal here. Designed to deliver 74% of transfers arrive in under 20 minutes. I wonder what their fees are. 24/7. Well, there you go. Some sort of currency converting company. And I guess a lot of their profits are they're earning interest on their customers' cash. Kind of smart there. Hey, what's up, Lopez? He says, are you still in here, Lopez? I'll check out BTSG if you're in here, for sure. If you had to full port all of your investments today into one stock, what would it be? It'd probably be, since it's so risky, I would just pick something super safe like a Waste Management, a McDonald's, or maybe a Microsoft. If I just had to pick one right now, I'd just pick McDonald's. Okay, just because they're so safe. So here's, someone said KKD is a horrible stock. Well, should we confirm you and look at the stock? Actually, I looked up KKD. I can't find that stock. I did look for it, though. Hey, what's up, Dino? He says, bro, Synopsys designs chips platform with recent NVIDIA. Oh, yeah, I completely forgot about the company. You're totally right. NVIDIA actually just bought them. Actually, look at this. If we go to the NVIDIA portfolio, we get to see what all these super investors own. Like, we can see exactly what Nancy Pelosi's doing. But there's also NVIDIA. NVIDIA actually just bought a bunch of Synopsys. It's 12% of all their business. Let's actually see. They've recently made some moves. They did just sell out of a bunch of stocks. They sold out of APLD, WeRide, ARM, RXRX, but they did just buy for the first time ever Intel, Nokia, and Synopsys. So Synopsys right here. Helping out NVIDIA. Let's see how they are doing. So the stock isn't doing too well. Technically, the stock is the same price that it was in 2023. So they've been flat for like 3 years. All right, let's get some research on this one. Design automation was 1.85 billion, representing 82% of their total revenue. So 82% of their total revenue is design automation, fueled by robust demand for EDA software and hardware. Design IP revenue totaled 407 million, impacted by challenges in China. Okay, well, let's go look at their fundamentals. So net income. So they had a one-time adjustment this quarter. It says they only made 65 million net income. Well, they actually made a lot more. They actually made 320 million. So they had a one-time adjustment there. Look at that revenue bump. They did, wow. Actually, this quarter was really good. 2.4 billion, up 65% year over year. So this quarter specifically was really good. Did they? Okay, actually, wait. This is because they bought a company. So actually, the growth from 2 quarters ago is inorganic, but it's still growth nonetheless. Basically, if you go to the cash from investing activities, again, you want this to be negative. If this number was positive, that means you're actively selling out of your assets. They spent negative 16.5 billion buying a company. So they spent $16 billion buying some asset, buying some company in a merger acquisition. So that's why the revenue grew 65% year over year. And maybe that acquisition is having them a little one-time adjustment to their profits. Who knows? So let's see what their fundamentals are. So the net income is supposed to fall, actually. Look at that. The PE is a 65, but the forward PE is 107. Can we actually see that? Ooh, so yeah, so actually last quarter they had an adjustment too. They actually lost money last quarter, but maybe it says they made 440 million net income. See, I don't know. That's the tough part. I guess the only thesis is I guess they might still be expensive even at this price right here. So, yeah, they're in the NVIDIA portfolio. I guess they do manufacturing of chips, maybe someone was saying. Interesting name there. Yeah, design automation. Interesting there. There's some good ones here. What's up? Yuki said 20 seconds, or is that a stock right there? What do you mean? It's Krispy Kreme. Oh yeah, Krispy Kreme. Yeah, they had to change their ticker symbol. Yeah, so Krispy Kreme unfortunately has done really bad. They just can't get profitable. They're selling out of their own assets. So, like, I mean, look at this. Just kind of think about this logically. Look in the top right. This whole company is worth 648 million. And I like Krispy Kreme, but I would not buy the stock. The whole company's worth 650 million. Let's say you buy the whole company for 650 million. Well, you're buying a stock that, lost you 30 million, which is 5% of your market cap, and lost 20 million, 440 mil, 30 mil. So they just don't make money. Net income is negative for the past 5 quarters in a row. Revenue's negative for the past 6 quarters in a row. Like the growth is kind of gone here, sadly. And it's always like the stock price is usually explained by what the fundamentals are doing. And it's kind of sad. Like the lifeblood, the company, the revenue, the sales is all negative for the past 6 quarters in a row. Same with net income, losing a bunch of money, losing more and more. So it's a tough one. Oh, is MELI a good buy right now? This is like your South American Amazon. The burger pipeline. Buy McDonald's and weight loss development company. You will own the cause and effect. That's yeah. I'm really bullish on AbbVie. They're getting into weight loss, which is kind of cool. So, Monster and Caterpillar. I really like those. Actually, I love both of those. I would happily own both of those stocks right there. Nice. So here's MELI. The only bad news is increased competition from Amazon. Yeah, dang, it's gone from this news right here, but Amazon, or let me just start with this context. Basically, half of this company's revenue all comes from just Brazil. So Brazil is 52% of the revenue. Amazon just announced in the 6 biggest cities in Brazil a 15-minute delivery service. So MELI is very similar to Amazon, boxes, e-commerce, all that. So yeah, commerce services. They also have a financial tech business, but yeah, product sales. What I love is the top line growth. People like MELI because potentially it'll grow more than Amazon just from the law of large numbers, because Amazon does 200 billion a quarter of revenue. Well, MELI only does 8 billion. So there's potentially a lot more growth in these, international markets. So yeah, the revenue growth, it's just impressive. But the margins did fall this quarter, like a weird margin collapse. Check this out. So gross margins are down 5. Net margins fell by 40. So check this out. The revenue grew by 44, but the net income actually declined by 12%. Is that real though? I mean, it only grew 8%. So actually net margins did fall like 30%, but that's okay. They still print money. And this is in US dollars as well. So even though they're a South American company, they still make like 400-500 million in net income a quarter. They're the cheapest they've ever been. So all that being said, kind of all the bearish news, I like Amazon more, but I'd still consider owning this one. It's really not that bad, but I think I would just rather own Amazon. Amazon's actually cheaper. They're at a 30 forward PE. Amazon's at like a 25. So it's an interesting South American company. Total payment volume, number of items sold. They sold 750 mil. Let's see how their fintech business is doing. I would like to see that. So you should like this. Fintech segment revenue rose 51%. Wow, the fintech segment, that must have led most of the revenue growth. So the fintech revenue grew 51%. Portfolio nearly doubling to 12.5 billion. Pretty cool. Well, there you go. There's MELI. Ooh, Hims. Hey, what's up, Catherine? Hims. Oh, wait. Hey, Lopez, my bad. They're BTSG. I'm so sorry. I'm so behind. I apologize there. Here's Bright. Let me get to Bright Spring Health real quick, and then we'll do some of these other names like Hims, and we'll look at a few more here. Then I gotta go. But yeah, this has been fun. If y'all want to hit the follow button, we stream every day. I sell nothing, no course book. Just trying to grow my YouTube channel. So yeah, if you want to help me out, make sure to hit the follow button on my YouTube channel. You just type it into YouTube. My YouTube channel is called Nathan Robert. Very first link, or the second link in the link tree in my bio there. So here's Bright Spring Health Services. The stock's done phenomenal. Wow. Congrats if you own them. You're definitely up on your money. They're worth 8.4 billion. Oh, hey, the market closes in 10 minutes. So they do pharmacy solutions, and check out the annual growth. I mean, that aligns with the stock price. No wonder the stock is doing so good. The fundamentals really are improving. Wow. Let's see how it did this quarter. This quarter, the revenue grew 32%. That's great, these year-over-year comps. And they also have a provider service. Interesting. Revenue comes from the US. All right, let's check out profits though. So the revenue grew 30% to 3.5 bill. And the net income on that was 77 million. That's a record net income quarter. Never been close to it before, never been higher. And so the before tax was 108 million. After tax was 77 million. So they really did keep after tax 77 million net income. So it's really a company that's like converting from a company doing no net income to like printing over 200 million in net income a year or more. The free cash flow was 200 million just this quarter. Wow. No wonder this stock has done so good. Actually, thanks to this one, I'll put them on my watch list. Some sort of pharmacy, healthcare solutions company. No, deny cookies. 41 million prescriptions dispensed. Maybe they make the dispensers that count the pills or something. Who knows? Over 400,000 unique clients served. 40 million prescriptions dispensed with an industry-leading 99.99% order accuracy. Over 90% of home health branches rated 4-star, 44% reduction. Well, anyway, here's the 2025 performance highlights. 1,000 pharmacies and care locations operated under license. Pretty cool. Bright Spring Health. Thanks for that one. I'll put them on the watch list for sure. Do you have any stocks you just buy with your heart? No analysis, just vibes. Ooh, I don't know. All the ones I've already done analysis on them, so it's kind of not fair for me to answer. Hey, Grab stock? Yeah, let me do Grab real quick. Let me do Grab before I go here. Oh, and I see. Oh, yeah, I got to get to Hims and Stera Labs. And Walmart. I see some other good ones. I might get to them. So here's Grab Holdings. This is what I call international Uber. I'm actually really a fan of this stock right here. So they do exactly what Uber does, but internationally. So here's where the revenue comes from. 30% is Malaysia, 23% Indonesia, Singapore's 20%, Philippines 9%, Thailand 9%. So notice the US and Canada aren't on here. That's what I like the most about Grab. It's like a pure international play. And they're already profitable, growing really fast. Here's their revenue, record revenue this quarter, 906 million. And here's their net. Actually, they had a one-time adjustment. Here's the non-adjusted numbers. The profits are like, what are they going to be the same time next year? Because it's so growthy, 100 mil just this quarter. I believe they have no net debt. And Uber loves them. Uber actually owns 13% of all the shares. Toyota Motor owns 5.5% of all the shares. So they're like backed by Uber. And it's like an international Uber. It's also smart by Uber to buy them because it's like their way to get international exposure because it's hard to get into those markets when Grab already like owns all those markets. So pretty cool. Ooh, what was this one? Oh yeah, Hims. This is a like healthcare website. Hims and Hers launched GLP-1 weight loss with Wegovy and Ozempic at 150 a month. So this is good news that they're finally bringing this back because a long time ago, well, not even that long ago, actually, it was right around this time here. Actually, it was this day right here. Novo Nordisk and basically Ozempic used to be sold on Hims and Hers website. Then they removed it. They're like, all right, we're no longer going to sell your stuff on your website. So then Hims and Hers is no longer selling any weight loss prescriptions. And that was their main growth driver. Then Hims and Hers creates a knockoff weight loss prescription that upsets Novo Nordisk. Novo Nordisk sues Hims and Hers, but Novo Nordisk stock has done so bad that they're like, all right, let's end the litigation and let's just partner again. So now they're back partnered. Yeah, they settled their patent litigation, all that. So yeah, Hims is just like a website, healthcare website. They have, look at their one number here. Subscription expanded to 2.51 million users. So they have 2.5 million subscribers. I guess that pay every month. So that's good. But it's been like a profit issue because they're not exactly cheap on a forward multiple. I think the forward's the same as the curve. Actually, a 41 forward PE, it actually has gotten a bit cheaper because the stock has gone out. So 41 times PE, that's still, way more expensive than every other stock right now. But I don't know. I just want to see how this will go. $150 a month for Ozempic. Well, they're good. They are still making net income every quarter, which is good. But notice the net income for the past 2 quarters has been negative year over year because they're not making the same margins as they were when they used to sell the weight loss prescription. So it's very important they sell some sort of weight loss prescription. Yeah, I'm just staying away from that one. Can we look at DataBank AI? Hey, what's the ticker symbol for DataBank real quick? What about Task? Hey, what's up, Silver? He said Task stock. So Task Us. Huh. Looks like they tried to get acquired, but then it didn't go through. They tried to buy the stock for like $17 a share, but then Looks like regulators didn't allow it. I'd love to see the news around that one. A $3.65 special dividend. Well, hold up. That's a 36% instant return. Look at this. So if you buy the stock right now, you buy one share costs $10.95. Well, they're about to pay you freaking $3.65 per one share in a special dividend. I wonder why they do that. Maybe because they didn't get the acquisition to go through. So what do? They do digital customer experience, trust and safety, and artificial intelligence services. Well, that bumped up this year specifically. That has nice year-over-year growth rate. Let me check out their website really quickly. Taskus.com. We bring together teammates and oh my goodness, that was okay. Some sort of maybe employee. Yeah, I don't know. Some sort of software company maybe helps out your employees. Oh, but hey, check out where the revenue comes from. I'm actually glad I pulled this up. Look at that. 53% of the revenue comes from the Philippines, so it's not like a US play. Yeah, the US is only 11% of their total revenue, so it's some sort of Philippines stock. Interesting. Or that's where most of the revenue comes from. They are headquartered in US, Texas, though. So they're headquartered in the US, but only 11% of the revenue comes from the US. So that's why, probably because 55% of the revenue comes from the Philippines, that's why they're at a 12 PE. So they only trade at 12 times forward PE because they're an ADR or an international company, I'm assuming. But I mean, the net income looks good. I mean, like a 10% net margins. They did 312 mil of revenue, 30 mil of net income on that. Good balance sheet, good free cash flow. Huh. Oh, but look at this. The net income is actually going to go from 17 mil to 10 million. So actually the net income is supposed to fall year over year. Now that's interesting. Yeah, look at the EBITDA, the basic EBIT, earnings before interest taxes. It's going from 30 mil to 23 million. So that might be why the forward PE is actually higher than the current PE. So maybe just bad news around the acquisition. It's actually probably bad news they're doing a special dividend. So I don't know how they can really afford that. They're basically the whole company's worth 900 million, and they're paying out 300 million in dividends to afford that. So I don't know how they're gonna buy that, but oh well. Oh, my bad. There. We'll look at one or two more. Home Depot. This is a great interest rate sensitive company. A lot of the interest rate sensitive stocks have been getting beat the past couple of weeks, just with TLT and yesterday's meeting and stuff was when they fell the most. But yeah, Home Depot, I'm a really big fan of. They're kind of trades like the home builders, but you get a great dividend. This is like a classic dividend growth stock. You buy the stock now, you pretty much get 3% of your money back a year. So they have a 2.8% dividend, safe payout ratio. They raise the dividend every year. So you get 2.8% of your money back no matter what in the dividend that they raise. And they're only traded 22 times forward PE, so only 22 times next year's net income. And here's their actual net income. They usually, like, if you average it out, they make like 3 to 4 billion in net income a quarter. I remember the stock boomed back in 2021 or 2 and 3 when all the wood prices went up like crazy. Yeah, it looks like the net income did fall. Yeah, so that was real. The net income really did fall 14% year over year. Oh, maybe from an acquisition. Look, last quarter they bought a company for $6 billion. Huh. Interesting. One stock I really like is Cavco. It's a similar one to them. They're also kind of at like this. Oh, the market closes in 1 minute. You know, it's a perfect time to end the stream here. All right. Should we do one more? What's this one? CHTR, Charter Communications. So this one, is this like a cruise line? Charter Communications. They trade at 5 times net income. So they're a telecom service. Okay. So it might just kind of decline by single digits for the rest of the time. Like, yeah. It's like a slowly dying business. I think that's the thesis. Kind of like a Comcast almost. So I guess internet, video. Oh, well, here's the video. That's all. Yeah, look at these. Dang, ever since 2022, it's just all negative year-over-year declines in the growth here. So that might be why people don't like this stock. Morningstar does cover this one. Let's actually see what they say. So I'm curious if they have like a bear thesis. Well, if we can get it to load, well, if it won't load, then oh well. I'll try again. There we go. Okay. So here's what the bulls are saying. Like its cable peers, Charter Networks provides a platform to easily meet customer growing bandwidth demands. As the second largest U.S. cable company, Charter has the scale to adapt quickly. The firm rapidly expanding into wireless business. All right, let's see what the bears say. Charter has a reputation for poor customer service as high quality alternatives emerge. Yeah, I don't know if they have like a good like moat. Like, can anyone just get into this industry? I don't know. A heavy debt load has limited Charter's financial flexibility and could spell trouble. Regulation will eventually turn on the cable industry, limiting pricing or forcing firms to serve. Anyway, I guess they still print money. Like, look, they're making 1.5 bill of net income a quarter. They only trade at 5.5 times net income. Ooh, I guess they do have some debt. Yeah, look at that balance sheet, like over 100 billion of debt and no dividend. Actually, I like that they don't pay a dividend because like it's basically a bet on what can they do to not get out innovated. Like, can they invest this 1.5 billion or I don't know. I would be careful around that one. Kind of reminds me of like a Dish or a Comcast. Yeah, CMCSA. Maybe Comcast is a high quality pick. I don't know, but it's not like either of them have done well. Both of them have been struggling. So let me end this with a quick portfolio update. What's up, y'all? Hope everyone's having a great day. Here's my dividend only portfolio. We are down 1% on the day. And here's my total percent change in every stock. So actually, hey, we are green on every single stock in here. Here's the Qs on the day, up or down 0.33. We also have a Roth IRA. A Roth IRA is just a tax-free retirement account. We're down 10% year to date, RIP, and these are all the stocks that we own in here. I'm trying to bring the growth back, but it hasn't worked out too well. Like Webull and Cormetics, they're down pretty bad right now. But we did just buy Moog. That's our newest position in here, MOG.A. So then we have our Moomoo account. This is known as our buy and never sell account because once we buy a stock in here, we just diamond hand it. We hold it on for the long run. We're not going to trim or sell any stocks in here. Wow, Powell Industries did amazing today. Murphy Oil did amazing. Dang, they were up 4. That's really good. So yeah, we were actually up 1.24% in there. And then finally, we have our Webull account, which was down 0.27%. Here's our all-time return. You know, I love being fully transparent. We're only up 6% all-time in here, and these are all the stocks that we own. Or here's the day's return. You know, Futu's down the most. A lot of software names like Reddit, Path. AbbVie is one of the best buys right now, I think. ABBV. Actually, AMD is slightly good. So yeah. Oh yeah, here's all my most recent purchases in here by order. So actually my most recent purchase is AppLovin, then it was AbbVie, then CHRW, then Southern Company, Iron Mountain. So yeah, anyway, hope you guys have a great rest of your day. Thanks again for showing up. Make sure you hit the follow button if you want to. Watch out for people impersonating me. I sell nothing, no course book. If you want to support me, please follow my YouTube channel. That's the only way. My YouTube channel is called Nathan Robert. Link to my bio. You can just type into YouTube Nathan Robert. I'm trying to build up my YouTube channel because TikTok keeps screwing up my stream. Like right now, this stream has been cooked because they removed my stream from the For You page eligibility. So the viewers are just stuck at this number for eternity. So anyway, we'll try and not get in trouble next time. But thanks again. See y'all soon. Check out the YouTube channel. Oh yeah, and if you want to get this app I'm on, if you're new in investing and want to start investing, I'd get this app right here. Very first link in the link tree in my bio. It's my affiliate link. Or all the apps are linked up there. But yeah, favorite app to buy stocks on and analyze them. See ya. And thanks everyone on the YouTube stream. Hey, shout out to member Brian Paul, Brianna, Call Me Open, Vulcan, Edwin, Brian Paul. Thank you all.